Preparing for Amazon FP&A interview? You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Tell me about yourself and why you want to work in FP&A at Amazon. I am an analytical finance professional who enjoys turning operating data into clear decisions. In my current role, I build forecasts, investigate variances, and partner with stakeholders to improve performance. Amazon appeals to me because finance operates close to customers, products, and rapidly changing businesses. I would bring strong modeling discipline, but also a bias for action and ownership. My goal is to help leaders understand trade-offs, allocate resources intelligently, and improve both customer outcomes and financial results. While answering, connect your analytical background to business partnering, explain your interest in Amazon's customer focus and scale, and demonstrate ownership, curiosity, and comfort making decisions with incomplete information. Question 2. What does FP&A do, and how does it create value at Amazon? FP&A helps leaders understand where the business is going, why performance differs from plan, and what actions will improve outcomes. At Amazon, that means combining financial results with operational metrics such as units, conversion, delivery speed, capacity, and customer experience. I would support annual planning, rolling forecasts, scenario analysis, and investment decisions. The value is not the spreadsheet itself. It is providing timely, accurate insight that helps teams make better customer and business decisions. Make sure to cover planning, forecasting, variance analysis, reporting, resource allocation, and decision support, while explaining how finance partners with operators rather than merely producing financial reports. Question 3. How would you build an annual operating plan for an Amazon business? I would begin with the business strategy and translate it into measurable drivers, such as traffic, conversion, units, pricing, headcount, fulfillment costs, and capital spending. I would review historical performance, validate assumptions with operating teams, and build a bottoms-up plan rather than simply applying a growth percentage. Then I would layer scenarios, identify capacity or investment constraints, and reconcile the plan to leadership targets. Finally, I would document assumptions and establish monthly monitoring against them. In your answer, talk about bottoms-up operating drivers, historical trends, assumptions, stakeholder alignment, resource constraints, scenario planning, and documenting risks so the plan remains actionable and auditable. Question 4. How do you forecast revenue for an Amazon product or business? I would forecast revenue using operational drivers rather than relying only on historical growth. For a retail business, that could include traffic, conversion, units per order, average selling price, promotions, and product availability. I would separately model existing products, new launches, and seasonal events, then test assumptions against market trends and stakeholder input. After building the forecast, I would compare it with top-down expectations, explain differences, and update the outlook as actual customer behavior develops. Be sure to mention driver-based forecasting, customer demand, traffic, conversion, average selling price, seasonality, promotions, new launches, and reconciliation between bottoms-up assumptions and leadership expectations. Question 5. Explain how you would analyze a budget to actual variance. I first quantify the variance and determine whether it is favorable or unfavorable. Then I decompose it into drivers such as volume, price, mix, rate, timing, foreign exchange, and one-time items. For example, a labor overspend might reflect higher units, overtime rates, or delayed hiring savings. I validate the explanation with operational owners and source data, distinguish structural from temporary impacts, and communicate both the root cause and recommended action. That keeps variance analysis decision-oriented. Focus on decomposing the variance into volume, price, mix, timing, rate, and one-time factors, validating with source data, identifying controllable causes, and recommending specific corrective actions. Question 6. How would you build a headcount forecast and explain changes to leadership? I would start with the approved organizational plan, current employees, open requisitions, expected attrition, hiring timing, promotions, and compensation assumptions. I would separate productive headcount from vacancies and contractors, because timing can materially affect expense. Next, I would connect each requested role to a business output, such as capacity, revenue, risk reduction, or productivity. For leadership, I would present the bridge from prior forecast to current forecast, highlight major changes, and distinguish committed needs from discretionary investments. While answering, cover approved positions, hiring timing, attrition, backfills, productivity assumptions, compensation, contractor costs, vacancies, and the connection between workforce investment and business outputs. Question 7. Describe a time you used data to influence a business decision. In one role, fulfillment expense was rising faster than volume, and the initial proposal was to reduce staffing broadly. I analyzed cost by site, shift, and unit profile and found that a small group of low-volume periods drove most inefficiency. I recommended targeted schedule changes instead of a blanket reduction. The team adopted the approach, lowering expense while protecting service levels. The experience reinforced that good finance analysis should identify precise actions, not simply describe unfavorable results. Make sure to structure the response with situation, analysis, stakeholder disagreement, recommendation, measurable result, and reflection, emphasizing customer focus, ownership, and analytical depth. Question 8. What would you do if an operating leader disagreed with your forecast? I would first understand exactly which assumption the leader challenges and why. I would compare our inputs with historical trends, operational data, and external evidence rather than treating disagreement as a conflict. If uncertainty remains, I would build alternative scenarios and show the financial impact of each. I would aim for a shared view of risks and assumptions, even if we retain different estimates. If a decision is required, I would document the rationale and escalate transparently with options. In your answer, talk about listening first, clarifying assumptions, separating facts from judgment, testing alternative scenarios, using data transparently, and escalating only after attempting constructive alignment. Question 9. How do Amazon's leadership principles affect your approach as a finance analyst? The leadership principles describe how finance should operate, not just how interviews should be answered. Customer obsession means linking financial decisions to customer experience and value. Ownership means following an issue through resolution, even when it crosses teams. Dive deep requires understanding the operational driver behind a number, while earned trust depends on accurate, clear communication. I would also apply bias for action by providing a useful preliminary view quickly, then improving it as better information becomes available. Be sure to connect specific principles such as customer obsession, ownership, dive deep, earn trust, bias for action, and deliver results to concrete finance behaviors and examples. Question 10. Tell me about a time you demonstrated ownership. Our monthly reporting process repeatedly missed deadlines because inputs arrived in inconsistent formats. Although I did not own every data source, I took responsibility for fixing the process. I mapped the workflow, created standardized templates, automated validation checks, and held short training sessions with contributors. Reporting became more reliable and the team reduced late submissions significantly. I learned that ownership means addressing the system behind a recurring problem, not repeatedly compensating for it through last-minute effort. Focus on a problem you personally drove beyond your formal responsibilities, the actions taken, coordination required, measurable result, and how you prevented the issue from recurring. Question 11. Tell me about a time you had to dive deep into an unexpected variance. A regional cost center showed an unexpected 18% increase in expense. Rather than accepting the explanation that volume had risen, I reconciled the ledger to operational reports and found duplicate vendor charges combined with a timing shift. I worked with procurement and accounting to correct the entries and redesigned the monthly reconciliation. The final variance was closer to 3%. Diving deep mattered because the initial narrative was directionally plausible but materially incomplete. In your answer, describe how you moved from a high-level signal to transaction or operational detail, tested hypotheses, partnered with experts, and converted the finding into a sustainable control or action. Question 12. How would you evaluate whether a new Amazon investment is financially attractive? I would evaluate incremental economics rather than allocate existing costs mechanically. The analysis would include expected demand, pricing, variable costs, fixed investment, headcount, working capital, and implementation timing. I would assess contribution margin, cash flow, payback, and longer-term returns, while also considering customer experience, strategic capability, and operational risk. I would build sensitivity cases for adoption, cost, and timing. The recommendation should clearly state what must be true for the investment to create value. Make sure to cover incremental revenue and costs, customer and strategic benefits, contribution margin, cash flow, payback, risks, sensitivity analysis, and the difference between accounting profit and economic value. Question 13. How do you prioritize competing requests from business stakeholders? I prioritize based on decision impact, customer consequences, urgency, risk, and effort required. A forecast needed for an imminent capacity decision would generally take precedence over a lower impact reporting enhancement. I clarify the decision each request supports, agree on the minimum useful analysis, and communicate realistic timing. When capacity is constrained, I present trade-offs rather than promising everything. This approach reflects bias for action while preserving quality where the financial or customer risk is high. While answering, discuss customer impact, business value, urgency, decision deadlines, controllability, effort, and risk, while showing that you communicate trade-offs instead of silently accepting every request. Question 14. What financial and operational metrics would you monitor for an Amazon business? I would select metrics based on the business model and decision being supported. Core financial measures might include revenue, contribution profit, operating expense, free cash flow, and return on investment. Driver metrics could include traffic, conversion, units, average selling price, in-stock rate, delivery speed, labor productivity, and customer contacts. I would examine relationships between them rather than viewing metrics independently. For example, lower delivery cost is not attractive if it materially damages customer experience or repeat behavior. Be sure to distinguish outcome metrics from driver metrics and include revenue, contribution profit, units, traffic, conversion, availability, delivery performance, productivity, customer experience, and cash flow. Question 15. How would you explain a complex financial analysis to a non-finance stakeholder? I would begin with the business question and lead with the conclusion, not the model architecture. I would explain the result through a few understandable drivers, using a bridge or simple scenario table instead of finance jargon. For example, I might say that profit is below plan mainly because volume was lower and expedited shipping increased. I would state the assumptions, separate facts from estimates, answer likely objections, and finish with the decision or action I recommend. In your answer, emphasize starting with the decision, using plain language, focusing on material drivers, visualizing the bridge, stating assumptions clearly, and confirming the stakeholder understands the recommended action. Question 16. Tell me about a time you made a decision with incomplete information. During a planning cycle, a supplier cost update was delayed, but leadership needed an immediate capacity recommendation. I used the latest contract terms, historical cost behavior, and a conservative range to create base, upside, and downside cases. Because the decision was reversible, I recommended proceeding with a limited commitment and defined a review trigger. The final cost was within the expected range, and the team avoided both unnecessary delay and overcommitment. That balanced bias for action with prudent judgment. Focus on the decision deadline, information gaps, risk assessment, assumptions, reversible versus irreversible actions, stakeholder communication, and how you monitored results after acting. Question 17. How would you handle an error in a forecast or financial report you submitted? I would notify my manager and affected stakeholders quickly, explain exactly what was wrong, quantify the impact, and provide a corrected version. I would avoid minimizing the issue or waiting for someone else to discover it. After correction, I would identify whether the cause was a formula, source data, process, or review failure and add an appropriate control. Owning the mistake protects decision quality and trust. I would also communicate what changed so users do not rely on the outdated version. Make sure to mention immediate disclosure, quantifying impact, correcting downstream materials, root cause analysis, control improvements, and maintaining trust through accountability rather than defensiveness. Question 18. How would you improve a recurring FP&A process? I would first map the process end to end and quantify time, errors, rework, and delays. Then I would identify the highest value improvement, such as standardizing definitions, eliminating duplicate inputs, or automating a repeatable calculation. I would involve users early, preserve necessary controls, and pilot the change before scaling it. Success should be measured through cycle time, accuracy, adoption, and decision usefulness. The best improvement makes finance faster while increasing confidence in the output. Discuss mapping the current process, identifying manual effort and failure points, defining customer requirements, automating where practical, validating controls, measuring benefits, and scaling improvements sustainably. Question 19. What is the difference between a forecast, a budget, and a long-range plan? A budget is an approved financial commitment for a defined period, while a forecast is the best current estimate of what will actually happen. A long-range plan extends further and connects financial expectations to strategic choices, investment, and capacity. The budget supports accountability, the forecast supports timely decisions, and the long-range plan tests sustainability. I would not force the forecast to equal the budget. I would explain the variance, update assumptions, and help leaders act before results are final. In your answer, distinguish purpose, horizon, update frequency, flexibility, strategic assumptions, and accountability, then explain how the three tools work together during Amazon's operating rhythm. Question 20. Why Amazon, and which leadership principle best represents your working style? Amazon interests me because its scale creates unusually complex finance questions, while its customer focus keeps analysis connected to real outcomes. The principle that best represents me is learn and be curious. In finance, I do not stop at reporting that a metric changed. I ask what operational behavior caused it and what evidence can improve the decision. I have applied that mindset by learning unfamiliar processes quickly, challenging assumptions respectfully, and turning analysis into practical recommendations. Be sure to choose one authentic principle, support it with a specific example, connect it to finance responsibilities, and explain why Amazon's scale and customer-centric environment motivates you. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.